This is a full in-depth breakdown of how to use SMT Divergence so you guys can start winning more trades instantly. If you guys don't know what SMT Divergence is, don't worry, that's why I'm here. So let's jump into the charts and let's get into it. So first things first, I just want to go on here and show you guys what an SMT Divergence is going to look like. And let's just like fucking describe what an SMT Divergence even is. So first, let's describe what it is. So SMT Divergence is essentially when we use two indexes. For me, I prefer to use ES and NQ. And unfortunately, Forex crypto guys, well, crypto, sometimes you can use this with BTC and ETH, but I wouldn't necessarily recommend it. In Forex, the only correlation that I have seen this work pretty consistently with is Euro USD and GBP USD. So if you want to use that, sure, go ahead. I haven't backtested it as much as I have with these indexes. But with that being said, let's jump in. So we have our two indexes. It's ES, the S&P 500, and NASDAQ, okay, NQ. And what we're going to be looking for is going to be finding the lagging index. So SMT Divergence, the best way to describe it is, let's draw this out here, where NASDAQ, let's say NASDAQ makes a high, and then NASDAQ makes a higher high. Cool, right? We're assuming that NASDAQ is continuing in an uptrend, but let's say that we're coming into a potential draw on liquidity. And if you guys don't know what a draw on liquidity is, go watch the boot camp, go watch the trading transformation. I probably made like 8+ videos on that for you guys. So go watch those. Again, everybody wants me to refer them back to the boot camp. That's one of the best tools. So let's say NQ makes a higher high coming into a draw on liquidity or a high, sweeping liquidity. And then let's say on ES right here, we make, again, a high, but we make a lower high, okay? And again, assume that this little trend is drawn on ES, not on NASDAQ. I'm just drawing it on here so that you guys get the picture, okay? So there's a lower high on ES, but a higher high on NASDAQ as we're coming through and sweeping liquidity. And let's say ES moves down even more so, okay? What is that telling us about NASDAQ? Because we know these are correlated pairs and we know these are correlated indexes. When ES makes a lower high and continues lower, as we're coming into this liquidity sweep level, we can see and we can know that NASDAQ is a lagging index. So NASDAQ is continuing that uptrend that was being made on whatever time frame it may be, whether it was the 15-minute, whether it was the 5-minute, whether it was even the 4-hour. And we're going to go into the chart and show you guys that this happens on every single time frame. Why? I've said this so many times, because price is fractal. All this stuff that I teach happens on every single time frame. So whether you're a scalper, whether you're a swing trader, you can apply this to whatever you guys want. So ES makes a lower high and goes down, but on NASDAQ, we see that it makes a higher high. So we can identify, see that, hey, NASDAQ is the lagging index. We see that ES is now breaking structure, it's going lower, and it's starting to form a downtrend, while NASDAQ is still forming bullish structure. But we know that won't last for long because we know that ES is already going down off of that liquidity sweep. So with that in mind, what can we do? We can go into NASDAQ and we can start looking for entries. We can go down into a smaller time frame. We can use our classic entry model that I've made several videos on in the past that you guys can go back to the bootcamp, trading transformation, or just any of my other strategy videos and find different entries to be able to execute off of this. So we would go into NASDAQ and we would see, oh, boom, there's a break of structure. It filled a fair value gap on the lower time frame and it respected it. Awesome, we can enter off of that. And why do we want to enter off of NASDAQ? Because it's the lagging index, right? ES has already made a lower high right here. It's already made its move down, and it's pretty much telling us the future of what NASDAQ is going to do. And let's say ES comes down and ends up sweeping out like high time frame liquidity as it's going down to the downside. We can safely assume, since that happened, NASDAQ, if it's still hovering above here, I just made a trade recap on using SMT Divergence, where you guys can look back on literally any of the trade recaps that I've done, seeing that most of my trade setups are based off of this. And this is a super awesome tool. So now let's go in here and let's show the inverse, which is a bullish SMT Divergence. So that's a bearish. And again, this isn't like ES directly, it can happen on either or. So now for this example, let's say that NASDAQ makes a low and then makes a higher low and starts continuing higher. Okay, and again, let's assume that it's off of, this time, let's say a high time frame fair value gap, because this doesn't only have to happen off of liquidity sweeps. Again, you guys think of my strategy. We need high time frame bias, and I just released a video on that. So how to find your overall bias within the market. Find your bias and then find a highly executionable price range that you guys can go into and start executing on. And that's what we're really looking for here. We're looking for an SMT divergence within a highly executionable price range. Okay, so here on NASDAQ, let's say we come in to a bullish fair value gap. We make a higher low here, but on ES, let's say we make a low, and then boom, we make a lower low, again, within that highly executionable price range. We can safely assume that ES is the lagging index. So in turn, NASDAQ has already broken structure to the upside. It's already moving up. We can assume, hey, since ES made a lower low, it's lagging behind NASDAQ. And what's likely going to happen? It's likely going to go higher. So then what do we scale down and look for? We look for executions. Okay, we're going to want to see, okay, maybe we go down into the 5 minute and we see, okay, it broke structure. We fill the fair value gap. Awesome. What are we going to do? Long that shit. Same thing, if NASDAQ comes up and ends up hitting like a liquidity target, okay, more than likely, same thing is going to happen on ES. It's probably going to go higher and it's probably going to end up taking out a draw on liquidity. Okay, so that was like my little Picasso painting of it on the chart. Now let's actually go into the candlestick chart and show how we can identify this. And again, if you guys want more examples of this, because I'm only going to show a couple, I pretty much use this every single day. A lot of people say that they don't even take a trade unless there's an SMT divergence. So this is super, super helpful. Okay, so let's go in here and let's just literally put on any trading day and let's see. This is just like blind reacts. See if we can find a SMT divergence. Okay, I know we had really high impact news this past week, so I'll go ahead here. Boom, Wednesday on, what was that, 10th of July. So boom, here we go. Okay, so let's see what we have going on. Again, just for this video's purpose, let's say we already understood the bias. Damn, this low-key looks like a high impact news day, but whatever. Let's say we already understood what the bias was for the day, and let's say we knew we were looking for longs. That's another thing, okay? Pause. Before we even get in here, something you guys have to understand, SMT divergence is nothing without bias. So if you guys don't know how to find daily bias, awesome. Guess who has literally like 6 videos on that? This guy. I probably have more videos on concepts and trading than all of the mentors combined. Okay, so go watch the daily bias videos, figure out how to find daily bias. And then when you do that, right, we're going to come into the market, obviously understand our daily bias, because let's say our daily bias is bullish, but we see a bearish SMT divergence. Are we going to want to take that? No, because our overall bias is bullish, right? We're looking for bullish SMT divergence. So keep that in mind, okay? We're never, this isn't just like, oh, I see an SMT divergence on the 15-second time frame, so boom, I'm going to enter with no bias, no nothing. It's like, no, bro, like we need other confluences involved with this. This is a confluence in itself. So let's look in here, Wednesday, the 10th of July. Let's see what's going on. It looks like we have a little sweep of liquidity right here. Okay, so we'll mark that out. Let's go over to NASDAQ and we can see, boom, sweep of liquidity as well on that market open. Let's scale down into the lower time frames and let's see if we can identify a SMT ski. So let's see here. This low was made at 10:45. This low was made at 11. This low was made at 11:15. Let's go over to ES. Let's see, 10:45. 11:15. Okay, so these were even. Maybe we could see one on the 1 minute time frame, but I don't really prefer to go down and scale all the way down there to the 1 minute time frame to try and find SMT divergence on the 1 minute. I prefer to keep it on the 5 minute for entry. So on this day, there wasn't an SMT divergence. Sometimes you won't find one, but again, a lot of people say, hey, I won't even enter a trade unless there is SMT divergence. So let's just go to the very next day and see if there is one. And typically, more often than not, these things will happen within those macros. So from like 950 to 1010, that's typically a hotspot. So we can see 950 we made high, and then at around 1010 we made a lower high on ES. Let's go and see if NASDAQ has a similar situation or if there's an SMT. I think we have one here. Hell yeah, look at that, man. And in line with the liquidity sweep. So look what we have here. I'm telling you guys, this shit just fucking falls from the sky sometimes. So boom, market opens, right? Again, let's assume that we understand the overall daily bias is bearish. We see boom, high time frame liquidity sweep off these relative equal highs. What are we looking for? We're looking for an SMT divergence. What's a bearish SMT divergence? One of the indexes making a high and then a higher high, the other index making a high, then a lower high. So in this case, we have NASDAQ making this high right here, and then a higher high right here, as well as sweeping out pretty much pre-market liquidity. And then on top of that, let's go over to ES now, and we can go in here, and we can see ES makes what? A high right here, boom, and then a lower high. Obviously, we have relatively choppy price action, but we can see lower high gets made, ES comes down towards this draw on liquidity. So once we see that lower high get made and we see the higher high get made on NASDAQ, what are we obviously looking to execute on? We're looking to execute on NASDAQ. So we see that this was the higher high, right? So what can we start looking for within there? So boom. Oh wait, I actually took this trade. Say less. Watch the July 9th trade recap for extra confluence on this. So boom. What do we have here? After the SMT divergence gets made, we have a break of structure. On top of that, this imbalance gets disrespected on this candle. Maybe you wait until price comes all the way back up here to fill it. But regardless, we come in here. Maybe we just enter purely off the break of structure, but we can see, boom, what does price do? Seeks out that same draw on liquidity that ES wanted to seek out. Boom, hit to the fucking T, and then price continues lower and lower. So boom, NASDAQ made a high, higher high, ES made a high, made a lower high, so we know NASDAQ is the lagging index, our overall daily bias is bearish. We scale down, we look for our entry confluences, whether it's break of structure, inverse fair value gap, whatever it may be, fair value gap, order block, equilibrium, breaker block. I've made so many videos on confluences, it's impossible for you guys not to choose one. Okay, look for those, and then boom, price ends up seeking out the same draw on liquidity that ES did. Okay, now let's try and find an example of bullish SMT, and then we'll wrap this up. All right, go to Tuesday. So let's see here. I think we did. So we see here on NASDAQ, yeah, bro, look at this, bro. Okay, we make a high on NASDAQ, right when market opens. During the macro, 950. Man, I'm telling you guys, if you guys think trading is a fucking scam, holy shit. I literally just, bro, like, this is the shit that makes me excited. Like, I love this shit because it's like the shit that I'm teaching, you cannot deny this shit that it doesn't fucking work because like everything just gets put together every single time. It's fucking crazy. Anyways, NASDAQ makes a high, it then makes a lower high right during that macro. Let's go over to ES. Okay, we make a high right here. Damn, and unfortunately, this would have been a 1 minute SMT, so I guess that breaks my rule, but still relatively applicable of what we're teaching here. We make a higher high right here, but regardless, we can see that ES is the lagging index, right? Because at this point in time, at 9:53, look at where ES is compared to where NASDAQ is. So if we see ES is still resting at that draw on liquidity, where was NASDAQ at that time? Already at, this was the same high that we highlighted on ES. So we can see this high is significantly lower than the high on ES. ES is the obvious lagging index. We already took out this 15-minute draw on liquidity on NASDAQ. So what is the safe assumption to happen on ES? Go down towards that fucking draw on liquidity. And what did it do? Fucking plummets. Draw on liquidity, draw on liquidity. And I took this trade too. This was literally the most, or not the most recent, 2 days ago trade recap that I took. And I can literally break this down for you guys. SMT divergence from there. Okay, what did we get? Break of structure to the downside. I mean, this is literally rinse and repeat of the trade recap that I did yesterday. Boom. Bullish imbalance that gets invalidated right here. That in turn turns into whatever you guys want to call this, like a inverse fair value gap that gets flipped. Okay, so boom, inverse fair value gap. We also get a break of structure. We get boom, extension back up into that inverse fair value gap, rejection off of it, while ES is the lagging index. Boom, shorts off that. You can toss stop loss above here. Boom, take profits, fucking hit. Boom, you guys just learned a confluence that can literally determine whether or not you guys take a trade. Again, like I was saying, a lot of people, they really like to say like, yeah, I'm refusing to take a trade unless there's an SMT divergence. It's a pretty fucking smart idea because when we're coming into these highly executionable price ranges, again, whether it's in drawn liquidity, whether it's a high time frame fair value gap, whether it's equilibrium or a discounted price range, on the higher time frame and we're looking for price to reverse and continue the trend higher or lower in this case, we can use this and find 5-minute, 15-minute SMT divergence to identify which index is the lagging index, and then from there we scale down to into the lower time frames and we use our fucking bread and butter. Breakup structure, inverse fair value gap getting filled, order block getting filled, breaker block getting filled, equilibrium getting filled. I've given you guys so many confluences to help improve your trading so you guys can understand where the market wants to go on a daily basis. That being said, that pretty much wraps it up. Please like and fucking subscribe. I know a lot of you guys be fucking watching the video and not hitting like, not hitting subscribe. Why not, man? I give out the most free game in the entire space. And give out the most videos. All you guys be so greedy with my videos, bro. I swear. Like, y'all were on my kick stream, which, by the way, you guys should watch that shit. It's for free every single morning at 9 a.m. Eastern time, where I go over this exact shit that I just went over in this video. Tap in with those videos. Okay, y'all were on my kick stream talking about, you need to release more videos. I've released 3 YouTube videos in the past 3 days. Some of your guys' favorite mentors don't even release 3 YouTube videos in 5 months, bro. Y'all are mad greedy, and I spoil you guys. So just return the favor, give me a like, give me a subscribe. With that being said, I love and appreciate you guys. Peace out.